Welcome to Beyond Table Talk, a space for real people and real conversations that move us from awareness to action. Each episode dives deep into the issues that impact our daily lives, financially, emotionally, and socially, with real talk from real people. We're so glad you've joined us, and we've got a powerful conversation ahead. Whether you're tuning in live or catching the replay, thank you for being a part of this community. Now let's get into it. Meet our moderator.
Hello, and welcome to Beyond Table Talk, a signature conversation powered by the Association for Black Economic Power. I'm Sharon Taylor, your moderator for tonight's conversation. Our conversation tonight is on banking for beginners, youth, and teens in the financial driver's seat. Before we get started, please scan the QR code on your screen to complete our brief pre-survey. Your feedback helps us shape future conversations, and we greatly appreciate it. Before we begin tonight's discussion, we'd also like to recognize the supporters who help make programming like Beyond Table Talk possible. We extend our sincere appreciation to Affinity Plus Federal Credit Union, Alliance, Archie and Bertha Walker Foundation, First Bank and Trust, Huntington, Old National Bank, and Wells Fargo. Their investment help expand access to financial education, economic opportunity, and community-centered programming. For many of our youth in our communities, their first bank account also one of their first opportunities to make financial decisions on their own. Tonight, we're helping youth, teens, parents, and caregivers build a strong financial foundation, from operating a first checking or savings account to understanding debit cards, online banking, direct deposit, budgeting, and avoiding common financial mistakes. We're joined by two guests who bring extensive experience in banking, financial education, financial planning, and helping individuals and families strengthen their financial futures. Joe, Annette, let's start with you. Please introduce yourself and lead and let us know why you're here tonight and share a little bit about your banking and work that you do today.
Thank you. Thank you for the invitation tonight. I'm Joanna Sintra. I do community development and outreach at Old National Bank. And what first drew me into banking, it was because I saw how powerful financial knowledge and access can be in changing people's lives. So in my career in banking, it has taken me through mortgage lending. I when I first started, I was dedicated to working with entry-level first-time home buyers, and ultimately, in building those relationships in community, it got me into community development. So today, I bring those experiences together in connecting people and communities to resources, relationships, and opportunities that can help them build financial stability and to create a stronger future for all of us.
Thank you, Joannette. We're glad to have you with us tonight. Vincent, thank you and welcome back for joining us tonight. Please introduce yourself and how your work today helps individuals better understand and manage their finances.
Absolutely, Sharon. It's good to see you as well once again. So, like she mentioned, I am Benson B. Webb Jr., and I am the Vice President of Operations and Branch Manager at Arise Community Credit Union. And man, to say what got me into this, it does take me back, I must admit. So, I don't think I'll be able to sit here as the vice president of Arise Community Credit Union if I wasn't the treasurer to help found Arise Community Credit Union, which I probably wouldn't have been able to do if I wasn't an associate professor, excuse me, adjunct professor at the University of St. Thomas teaching core financial management, which I probably wouldn't have gotten if I didn't have a chance to teach the financial advisors out there, the new ones and some old ones there too. Past exams they have to take at Kaplan, which I probably wouldn't have gotten if I didn't have the experience I built going all the way back with interning with JP Morgan Chase and also working at a regional bank in my hometown in Selma, Alabama and Montgomery, Alabama regions banks. So I got my first taste of real world experience working at a bank. So I would say that there has been just a blessing to be able to understand the dichotomy of the have and the have nots growing up where I was and growing up how I did and the world I kind of grew up in. So I would say that education and teaching people how to put themselves in a better position when they know they may not realize that they have the power to do so. I think that's the biggest thing that brought me to this because once we have the conversation, it's easy to understand. It just takes the initial conversation and believing that you deserve more. So that's what got me into it, and that's why my work is so powerful to me, and why I'm so grateful to be at Arise.
Thank you, Vincent, and welcome back again. We're excited to hear more from both of you tonight. As always, we invite you to stay engaged throughout tonight's discussion by sharing your questions and thoughts in the chat as we go. To welcome everyone who is checking in online with us today. Glad to have you here. For our young person getting ready to open their first checking or savings account, what would you both say that what should they and their parents or caregivers look for before choosing where to bank? Now, Benson, you have an extensive amount of banking and you started out banking in a bank. Where would you say look for what should they look for when they select a bank?
Great question there. I would say the accessibility would be the first thing to kind of look out for. Think about where it's close to you. If it's in the community, is it easy to have access to it? I think that's the biggest thing. People, when they hear banking, they think of it, and those that may be considered like unbanked or underserved, they might not see that, hey, you still got the money there. It's still available for you. So bank where you're comfortable, bank where you feel like you will say belong, honestly, because I feel like this is so much money you're going to be putting toward the bank, having them protected, having them save it for you, or you save it for yourself. But again, I think making it as convenient for you as possible to get started, if you haven't gotten started, would be the first step because I want to see the progress. And there are steps you have to go through. It's nothing too extraneous, but still, we need people to know that if you just get started, it's easy to get done. So accessibility is probably the first thing I'd say there.
So you said accessibility?
Accessibility, make it easy for
Okay, so
yourself to get started.
okay. All right, thanks for that. Uh Joannette, what would you say?
I agree with accessibility, and I would add asking questions, understanding if there's any cost involved or a monthly fee in you having a checking account or a savings account with that banking institution. So that asking informational questions like, is there a minimum balance that I need to keep on a monthly basis to avoid a monthly fee? And things like that. Also, if there are any overdraft fees or any ATM fees when you go and use your card to remove to withdraw money from cash from your account. And I will also add look for tools that help you learn. So does the bank make it easy for you to set your savings goals or in tracking your expenses? Does it help you by setting your alerts when your balance is getting low and things like that? So it helps you in the process of learning how to manage the account. The idea is, and that not just to open the account, but to learn to make informed financial consumer decisions. This is how you get to the driver's seat.
Okay. So I hear you saying dig a little deeper on what are some of those fees that may be associated with either checking or savings. Yeah, because it was new to me that when you have like a Visa gift card, sometimes there are fees associated with if you don't use it. And they're
Mhm.
drafting 50 cent, a dollar each month. So you're saying watch for that too when they're selecting a bank?
Yes, ask for that information up front, so you don't find out as a surprise like you did with the gift cards. Mm-hmm.
Mm-hmm. Mm-hmm. You spoke about some tools too. Setting an alert. Say more about what tools you can find and what things people should be looking for.
So you'll find these whether it is on via email notifications or if you have your app on your smartphone. Depending on your budget, on your goals, you can set up an alert that it will give you a notification that your bank account has uh, hit a certain limit. Let's say that you say, oh, alert me when it gets to $50 or $25, and it sends you an alert so you know in real time what your current balance is.
Well, that's pretty slick. That would have
Mhm.
saved me during my college days a lot of
Uh-huh.
to say. But they do have those overdraft fees and such. So if you can set an alarm or some type of alert that says, hey, you're at your limit, that would be nice. That would be really nice. So some banks offer those and some don't. Is
Correct.
that
So,
Hmm.
okay? Mm-hmm.
yes.
All right. Well, Benson, let's if they're making a check-in, let's make it very simple as we talk about that.
Hmm.
For because we're talking to youth and teens, and this may be their very first opportunity. So you guys have given some tips right out the gate what parents and caregivers should look for when they're shopping for the right thing for them. What's the purpose of each account? And can you go a little bit more in detail on how should a brand new account holder learn to use them differently?
That's a very great question there, Sharon, because that sounds like a question that people have to answer with these different exams. So, to give it to it as simple as possible, just to answer the question that you presented, I would say if you're starting off custodial accounts, look for those because custodial accounts allow for you, let's say your child or someone you're taking care of, a minor, to open up a bank account because they can't open it up on their own. So, they don't need that parent, that guardian, custodian, whatever the case may be, that open that custodial account. But when it comes down to like the different types of accounts now, we have a few different. You have individual accounts, right, with individual, one person, only person in the account. You have your own beneficiary. You might hear things like a transfer on death account or POD or TOD, payable on death. Rather, for you want to pick somebody to say, hey, I pass away, pass it on to this person, a beneficiary. But you also have joint accounts that can be set up in a few different ways based on what your goals are. But again, the idea is to have multiple people together instead of having one person. And I'll try to stay out of going into like teach mode right here because again, it's something I definitely talk through. But you have business accounts, you have different type of business accounts set up for sole proprietorships, S corps, C corps, LLCs, your partnerships there. So if you're looking to do open up a business account, that'd be those type of accounts you look out for based off how you structure the business. And then fiduciary accounts, which custodial accounts count as also with your if you're doing estate planning, you have your will and testaments out there, and then also have the trust accounts. But getting back to custodial accounts, focusing on the youth and teens, opening that up, setting it up now, getting started, just puts them in a better position. I'm so grateful my parents did that for me. So I knew kind of how banking worked from my own perspective without having to necessarily wait for someone to tell me about it. But definitely look that up. Also, things called UTMAs and UGMAs, Uniform Transfer to Minors Act and Uniform Gift to Minors Act, certain type of custodial accounts that you could put assets in. So I'm gonna keep it there. Won't go too much deeper. But again, those are some ideas of different accounts that can be set up if you're looking to get started.
Well, I was just thinking the difference between a checking and a savings, and you dropped a
Okay,
whole
okay.
bunch of
But hey,
new accounts that someone else was probably thinking about. So I'm glad you
mm-hmm,
answered
mm-hmm.
those.
Hey, I'll go
But
deep with it. I'll go deep with it. But again,
yeah,
when
I
it
mean
comes to
that's
like checking accounts, saving accounts, you really want to kind of look for certain rates because savings accounts kind of pay a little bit more in terms of rates. You won't be based in the bank by any means, but it's a way to make a little bit of money while you're still putting your money away. While also things like money market accounts or CDs, some things that you have to commit a little bit more time to and commit to keeping the money there to keep from
okay.
having certain penalties. But those are some ideas also with those accounts. I can go on for days. I can go on for days
I
here.
see. I'm a just slow walk it just a little bit. When you say rates, you are
Hmm.
referring to interest rates, right?
Correct.
which
Correct.
is another conversation, but something that if our audience is listening and taking notes, you want to make sure, especially for our youth who are joining us for the first time or are interested in learning more about this. And then when you said CDs, you are referring to, and then talk about that just a little brief, just because we dropped it.
Okay, my fault. Again, I get deep in my little teaching mode there, but your CDs or certificates of deposit are a way that you can kind of set some short term goals up, right? You can set money away, and effectively you are putting it away in type of account where it would be beneficial to leave the money there. So make sure it's capital or money that you're okay with putting away. But with CDs allows you to make a little bit of money off of it, maybe 2.75%, maybe 3%, depending on the banking institution or financial institution or credit union rather, or bank, whatever the case may be. But yeah, look out for those type of rates or ways you could think about getting money off of it. So kind of go a little deeper in that. Your interest will tell you how much money you're making off the money you put away. And when you think of
Okay.
those CDs, it allows for you to put some money away that you can think is insured by the bank. Your money's going to be safe, but it allows you to make a little bit more money off of the money you got there.
Okay. Okay. I hope that makes sense to everyone. It makes sense to me. And what another thing that you brought up, and I don't want to miss this point, is when I asked the question about which bank is a good bank, we didn't mention credit unions. And credit unions may be a viable option. And there are a few here in Minneapolis that we arise that we want you to look into. But there is a difference in shopping with that too, with credit unions versus banks. Right.
Cannot forget those credit unions there.
That's right. And check those for some of the things that you guys both mentioned earlier. So I'm going to ask us to go way back. And like they say, some people go back a little further because I want you to think about when you first started managing money for yourself. And so I might go back a little bit in time. What is something about banking or money that you wish someone had explained to you earlier, way back then? I'm gonna start with uh, Joannette.
Yes. So one of the things for me is that I wish I would have considered differently and learned differently was to give every dollar a purpose, right? So whether it is that you are going to spend a certain amount of dollars for a goal that you have, such as buying a car or paying for your books, your first semester of college, save to saving for other reasons in the future. And another thing that I wish that I would have understood earlier is the power of starting small. You don't need to start saving big right away. Just start with the habit. It start that habit of saving, even if it's a dollar, whenever you get 10, or whether it is from your income or birthday money or your chores, things like that. Developing that habit of saving some of it every time you come across your money. And another one that I'm still learning is how it all works out long term is compound interest. I wish that would have been explained to me differently. How compound interest, which is your money now, how it can grow bigger in the future. So it's just not necessarily how much money you have now, but it's how much money you're going to have in time. Those are the three things that I wish I would have learned differently.
Well, that's awesome. So I'm gonna circle back to that now that you know, but not yet. I'm gonna give Benson an opportunity to answer the same question about thinking all the way back to your first start money managing money by yourself. And I know you said that your parents were there to help. And so we want to speak to the youth who have their parents there to help, or they may not have a caregiver there to help. But what would you say to them?
If I can sum it up very simply, you don't have to spend all your money. You don't. You don't have to. When I say that, I mean that there are going to be times that you're going to meet people or just see, look what's going on out there in social media. You really can't scroll past too many pictures without seeing an advertisement. People are getting paid very well to try to get money out your pocket. If you kind of pay attention to that, you may not think, hey, I need to buy that too. That seems like the right thing to buy. They do a great job of marketing to you, advertising, convincing you. So it's okay if you have money for yourself. It's okay if you don't spend money with everywhere, everything you see. You're gonna live a good amount of time. Life is not as short as people make it seem. It's okay to hold your money. So just from a practical standpoint, finding ways to put that money places where it's no longer just sitting there as money. What got me started really to think about keeping my money to myself was buying different things like stocks, buying little investments, things that made more money for me. But in my mind, I'm still scratching the itch of spending the money, but I'm spending it in a way that I can still get to keep it, you know? So that'd be the biggest thing. Just focus on spending on things that are going to be valuable or provide more to you in the future than spending on things that just feel good right now. Tomorrow won't really mean anything.
Okay, so I hear both of you kind of saying something very similar yet different, advice and things that you learn. One, I love the idea of creating a habit, just getting in a habit, and like you said, Benson, of not spending it all. But Joe and Nat made a point to being in that, put something away every time. It doesn't, and start small. That seems very attainable, right? Start small, whatever's in your budget during this time, this week, next week. And then, you sure you don't need it all? Because they do a lot of advertisers. You sure you don't need to buy that? Just pick and choose. Be smart about where you're spending. As you describe it as an itch, don't scratch the itch all the time.
You know, willpower just can last so long. So my thought process is I still get to get, I get to spend money, yay, but I can still go back and get it if I need it. So hey, sometimes you gotta outsmart yourself. And that's where I
Gosh,
realized to help me.
that sounds good. You also mentioned too, like find places to put it. Now, just so we're clear with our audience tonight, um, as I just recently saw a story about Kevin Garnett. He used to play for Timberwolves, but he said when he was first making a lot of money, he used to put it in his mattress because he didn't know where to put it, didn't know what to do with it. So finding places does not mean under your mattress, right?
Mm-hmm. Mm-hmm.
What are some other things that you were implying? If it's in the bank in the savings, is that enough? Or in your checking?
You want to diversify. You definitely want to diversify the portfolio, even at that point. I would say that when it comes down to the idea of what you can invest in, you have different investments. You want to go kind of a higher level, like stocks, bonds, securities, things of that nature. If you want to think about how to start that investment piece of it, I would say just to kind of make sure you focus on this piece of it, those habits you have to build up. And I would say the habits are more valuable than the money itself because the money can come and go as you see it. But habits that you build, you want to start actually doing that and going to doing it point, you have to be able to start putting that money away and not having to need it, and not necessarily saying, okay, I'm giving it all away. It's from a psychological standpoint, if you're thinking about it, you're like you're buying something to give your money away to somebody else. It's hard to think about it and keep it there because you kind of get nervous sometimes. Markets change, things can be a little shaky. You want to take it back, not realizing sometimes just leaving your money where it is might be the best bet. Times they
It's,
might not be, but at the same, but kind of go a little deeper to that point. We're not too deep because I can sit here talk about this all day. You want to
yeah,
find those easy
not too deep.
access points there because if you're not used to investing or using brokerage accounts, it can be a little confusing. So start to that point, start small. Go to your local bank, go to your local credit union, have a conversation, say, hey, I want to put money aside in your savings account. CDs would be a good idea. If you're looking to send money away to build that habit up, put the money aside, you can't touch it. And now you have to build the habit of, okay, this money is for me right now, but I have to figure out the right now. So I would say start small, CDs, money market, just to build the habit of needing to keep the money where it is, just so you can keep it for the long term.
Okay, okay. I want to also bring our audience into this discussion for a little bit, and I want them to be thinking about it. Feel free to drop it in the chat for family watching us tonight, and in their experiences, please share with us that hasn't started teaching banking skills yet. What's a good first step that they can take together? So, and I want to give some thought. Like, is there an age? You brought up education, as a world. Is there a certain age you should start to even be thinking about this? What do you think, Joe and that?
I don't think there's an age minimum or limit when it comes to saving and learning about your finances, because this is one of those lifetime journey lessons where sometimes you're going to make a mistake, and hopefully it's just a $10 mistake that teaches you a lifelong lesson so you don't repeat it, right? But one of the first steps that you could do as a family is have these discussions as a family, and talk about money, so that people, you become more comfortable with it. And some of it could be like, for instance, if you have $50 that you want to spend, then decide whether, and talk about among each other, is that a need or is that a want, to help you identify how to spend that money, right? Or if you were to receive $100 today, how much would you spend out of the $100, how much you would save, or how much you would give, because also giving to church or a charity, it speaks loudly about our values, right? You can take it to have a further conversation. I mean, not just opening a checking or a saving account, but naming what the checking account is going to be for. So the checking account would be for regular expenses that you have on a regular basis, compared to a savings account is going to be the money that you put aside every time you come into money to buy your first car, or a money market account that is going to be for future education, or a vacation, or a special gift that you want to do. Also, another family step that you could take is looking over the balances of your accounts, understanding the fees, set a savings goal. If you want to buy a car by the time you're 16, what does that mean, right? And what are the expenses of owning a car, gas, insurance, etc. Having those conversations of expenses that we all have regardless of age. Hmm.
Okay, that's some great feedback. I see, before I jump to you, Benson, I see that Darlene has joined us in the chat. And this is probably from our earlier question, where and I think I know where she's referring to. Welcome back, Darlene. Darlene comes to visit us. So good to hear from you. The
Mhm.
question is that what is meant by make your money make money? And we were talking about earlier, just a little bit earlier. What did you mean by that? I believe Benson made a comment about that.
Yep, yep. So the idea around interest, and I think it might be a compound interest as well on this, but the idea is, yeah, let's say you keep it very simple. Let's say you do like $100 CD, let's say, just for example purposes, and then say, okay, you make 3%. Let's say you make 3%. I think rates around there right now, and it means you're making 3% off of that $100 you put away in that CD or certificate of deposit. So by the end of the year, you can expect to make $3 off of that $100 you have in there. So now you have $103 when you get your money back after that CD matures, or you get your money back at that point. So the idea is that, yeah, you
Okay.
keep your money in there, it'll grow, and then you can take that same money, put it back into something similar to that, or to something more effective, and continue to grow that money like that, going to the compounding piece. So yeah, that's a little bit of what that interest in money making money for you. That's what I meant by that. When I did that.
Okay. Thanks for circling back on that too. So I'm going to ask you the question about, for a family that's watching tonight, and they want to start teaching banking skills or haven't yet. What's a good first step that they can take together? And then I'll also ask you the same that I asked Joannette about: is there a certain age that's more appropriate? And I love the examples that Joannette gave around saving for a car and things like that. What would you say?
I would say the best thing to do is sit down and play a game of Monopoly. I absolutely believe that's where a lot of my ideas around business and what got me into it, because that's what my family does. We will sit around and play Monopoly from time to time. And I think it's important that kids know that, hey, rent money got to be due where you get my money from. Sometimes you got it. So I think just making it a game, making it fun, making it interactive, making it engaging. I think that's the biggest thing. And, we didn't have the iPads back then, like heavily as we do now, but they got Monopoly on Monopoly Go or something like that. So I would think making it interesting for the child to do it might be easy for them to encourage themselves to get into it. And starting as early as you can, if they can start walking and talking, talk about it. Just if you talk about it amongst you and your spouse, amongst you and your friends, with children listening, they're picking up a lot of information. And if they're able to kind of understand these terms and the big words we use in this world, they can kind of start to piece together what they can do, what power they have in that. And the idea is to empower them to know that I understand these words already. So you can't try to use the words against me in certain positions. I grew up listening to it, grew up thinking about it. Was I just a financial genius when I got out of school? No, I wouldn't say that, but I would say I at least had an idea, and it made it easy for me to buy my own first property or buy a duplex in St. Paul. So just the practice
Hmm.
of the game of it, I was like, oh, I'm gonna play Monopoly, and you'll see there's a lot of, I would say, equivalence between the
Okay.
game and real life there.
Sure. They do have a Monopoly Junior too. They do have that
There you
version for
go.
younger adults, for younger folks. And I would add one thing to this conversation too, like going into a bank. A lot of people don't go in banks anymore. If you don't necessarily have to cash a check or get a withdraw money. So I think if you're not using the ATM at a bank, kids don't understand that there is that building. There's a facility, a credit union or a bank that exists, and that's where you can safely have your money and practice some of the financial investment. So that's one. It came to me as I was thinking. I sent a teenager into the post office. It was like, what do I do there? Like, what's this? Like, go mail the thing. But it's very different life. They don't
Yes,
go
it
into
is.
buildings like that anymore. It's all online. And so, yeah. So take a little field trip in the world of education. Take a field trip to the bank. And they are happy to see children, as a matter of fact. So they would do the whole thing for them. Okay, I want to shift gears just a little bit to talk about debit cards because that's the thing. That's what's preventing them from going into facilities. But debit cards, digital banking, and avoiding costly mistakes. So let's move to that. For a teen getting their first debit card, oftentimes that comes automatically as soon as you sign up for savings or checking, or they will ask you immediately, do you want a debit card, right? So, what do they need to understand about available balances, pending transactions, overdrafts, and the fact that swiping a card still means you're spending real money? What would you say to that? I'm gonna swing back to Vincent, and then um, Joanette will pick you up.
Realize I was on mute there. But I would say the first thing you want to kind of go down the list there, the available balance, it lets you know what's available to you, how much money you have that you can spend. Keep in mind, you also have those pending transactions that let you know this is the money that's about to come out. It may not have been deducted just yet from your balances just there. Usually, your available balance will have the pending transaction deducted, but again, it goes down to the bank, credit union you're working with. Some apps are a little bit different than others, but usually the available balance lets you know what you have left over. Now, you want to make sure you're paying attention to that because if you're a teen, you may never have to use cash, to be honest with you. Everything's on Apple Pay, everything's Cash App, that debit card. It just probably more archaic to you than anything else at this current point. But again, pay attention to the money that you're spending. And right now, it just looks like numbers on the screen. But if those numbers turn negative, like you're not keeping enough money in there, you start to see that an overdraft. So overdrafts is when you take too much money out your bank account that you do not have, and usually you have overdraft. You don't say usually, but depending on the bank, depending on the credit union, you may have overdraft protection that allows you to have some protection there. But keep in mind, after a certain amount of time, about 6 months, if you're doing that, people start to look at it a little bit more like, they might not be a good credit risk or safe enough to have there. So just pay attention to that overdraft. And again, swiping that card still means you're spending money. I know you don't physically see the money like leaving your hand, like you have to take it out your wallet or anything like this, take out your purse. But keep in mind, you know, these numbers on the screen is kind of like a video game life points. The more life points you leave, you don't feel this physically feel the life points leave you, but just keep playing that game and don't have enough life points. Eventually, the game will end for you. So think of it that way when it comes to spending that money on that card. But again, these are some ideas and terms you want to be familiar with.
Hey, little gamer vocabulary entered into the banking world
You
with the
know,
life points. I had to go all the way back. I was like, oh, like Mario, and you get two lives and then double
there
up.
you go.
So don't. Yep, you still swiping the card is real money. Okay, so doing that. If we're talking about mobile and online banking, just think about that for a moment. Does that give us a lot of that usually affords people an opportunity? You're on the road, you're out and about, so it gives a lot of independence, right? What features like account alerts you brought up earlier, or bank notifications, direct deposits, or some other card controls that you may not mention earlier but think would be helpful for them to know? Can you help them, yeah, helpful for them to know and that they can manage their money more safely?
Hmm. Yeah, it's easy to lose connection with your money when you're used to just swapping that car, right? So it's important to use technology to stay in your financial driver's seat, right? To always know, stay informed of where your money is now, where your money was before, and after you're tapping that card. So, as mentioned, setting up alerts will be very helpful for that. So using that technology to set your alerts to let you know, hey, you're under that threshold goal amount that you like to be, and it happens quickly. Even though you might think mentally you know what that balance with it is, check that amount if on a regular basis, so you know before you're spending it, because it might cost you more money if you don't, in fees for using money for a transaction on that debit card, that it maybe it was only for $5, but now with all the fees, that $5 coffee might cost you close to 30 because the money was not there in the account. So another alert that you can set on your phone is, besides the low balances, is when you're making purchases. So maybe you're a gamer and you have an automatic fee coming out of your account on a certain day of the month, so it alerts you, so you know, oh, that's also pending and not a part of my balance, right? um well, let's see. Also, it's helpful that if you would happen to lose your debit card or you misplace your debit card on your app on your phone digitally, you might be able to put a pause or block that debit card so no one can use it. And then you may either, if you find it, you can reactivate it, or you can report it to the bank as lost and you get a new one issued. Because it happens, we misplace the card, so you might drop it, and that could lead to a lot of financial distress if somebody else gets a hold of it. Hmm. So, as you mentioned, that debit card gives you independence, but it also comes with responsibility. So, staying in tune with that, what responsibility means. So, by getting informed decisions, paying attention to what that balance is before you tap that card, this will save you a lot of money in the future.
Yeah. Oh, that's great advice. I see that we have one of our viewers who has entered a question in the chat. Um, so, what tips do you have for establishing a healthy schedule of financial management? When bills should be paid? When should we look at accounts? When should the budget be looked at? Do you have some healthy schedules, some tips that you can share with our viewer here? Thank you for entering that. Showing that?
Yes. Oh boy. So that is also a great habit to develop. So I personally have some items that I pay automatically and bill pay. and then I have some items that I manually pay. Um, just because those are the amounts that fluctuate, right? The bills that are not always the same amount every month, I like to pay manually. So I set a reminder, or I do them every 10th of the month or every 5th of the month or so. So I monitor and stay conscious of what that electric bill is costing me this summer. That's one of them. Or your gas bill is costing you during the winter. And then I like to do an overall budget review twice a year. So in January, just because we're all motivated around that time of the year and then want to reset our fitness goals, financial goals, and other goals, right? So I like to do it then. And then I also like to do it in July because it's midpoint towards the year and it kind of helps me see where I overspend, where I might need to cut back, or am I on track with my financial goals. And
Mhm.
also because I'm a banker and I like looking at the bank statements. And I also um, look for any fraudulent charges that might show up on any of your statements or bank accounts. Like for it's happened to me more than once where there will be a generic charge of like 200, which is not a lot of money, but I don't recognize it. I don't know who it is, what it's for, and they just keep charging it on a monthly basis. And if you add it up long term, that adds up to a lot of money that I could be investing elsewhere and earning compound interest, right? So that's what I would suggest. Knowing what of the items, regular bills are set amounts that is going to be the same thing every month. Like for instance, your mortgage or your rent or your car payment. And then the other ones that you may want to monitor more regularly is your groceries bills, your electric, gas, and things like that. And insurance nowadays, because insurance keeps rising. So staying alert there and knowing when to compare and maybe look for other options with different companies. I hope that was helpful.
I think so. And I love that you spoke to a broader audience as well, so that they can see those habitual bills that they may have. And like for you, we talked about gamers earlier, it may be a subscription that maybe you're paying that monthly subscription that is not the gas bill per se as a youth or teen, but you have a monthly pay in for a game or something for your um, car insurance that you may be responsible for. And some of those companies, they make you do an auto deduction, right? And so,
Yes, for the
yeah.
free trial. So you have to, it's a free trial, but you
Oh,
have to enter your financial information because if you forget to cancel on time, they're going to
yeah.
charge you on a monthly basis. Yes, that's a great example. Thank
That's, yeah, that's a big one. The free trial that ends in 7 days or 30 days. And if you forget, it automatically takes it out of your account, which can make a huge difference if you aren't paying attention. And especially if it's happening for several months. Maybe it's that gym membership that's automatically being deducted and it's at 1999 or something, and then all of a sudden it's been 5 months until
Mhm.
that can happen. Benson, like you're on the edge of your seat, you want to add something.
I just want to give praise because she did a great job explaining. I don't think I can
Yeah.
really add too much more to it, but if I do have anything to add, if it's possible, try to get your bills to hit on the same around the same time. Just because it depends. If you need to spread them out, spread them out. But if you can just kind of have it set to when you know all the money you need to have by what date, makes it a little bit easier. Because if you're doing things like you're doing the side hustles or you're doing the like a content creator, someone that might not have uh almost adequate funds, but consistent funds coming in, it's good to make sure you have an idea of what you need by the time you need it. Because if you have bills coming in at random times and you're not
Yeah.
tracking it, it gets hectic. And now you're gonna make yourself frantic. You really are, because only when money get tight, you want to make sure you know what money is going in and out. And I'm a little bit more of a nerd here, so I check it every month. That's me personally. I like looking at a little bit more than that, but if you're
Mhm.
if you're not into it like it, I would say, to me, if you have a goal, short term goals especially, you want to kind of look at it monthly, just because you can kind of check or catch those expenses that you might have forgot about. Because when money get tight, you're gonna
Yeah.
start to be mad when you don't have the money there, but you see the money be taken out when you didn't need what you're spending the money on back then. Just from a peace of mind standpoint, you want to make sure you have an ability to make the habits worth it by kind of having more control. It feels good to have some type of control over the money coming in and money coming out. So that'd be my add on to that. But again, she did a great job explaining
Yeah.
a lot of it.
Yeah. Oh, yeah. Thank you both. I mean, to answer the question about a schedule, you're recommending monthly, especially if you have a lot happening or maybe some inconsistencies, and or maybe it works to do something quarterly, or as you said, you said specifically, no matter what you're doing July and the new year, to go over like a overhaul over from the banking perspective. But let me look at all my statements and make sure you know what's going in, what's going out, and don't get caught off guard. I'm so glad you guys talked about too, watching for fraudulent charges. That happens more than people expect, and so, or the auto pays or auto deductions. And depending on where you are, especially with consistency, maybe you do need to break it down by you get paid bi-weekly, so these come out bi-weekly on your paycheck. So something like that, especially for our youth who may just be getting started with their first jobs and their first accounts. That may be something to look at as a schedule. Thank you both. That is great. I am thinking now about our going back to like our parents and caregivers. I mean, what a huge responsibility, because we're teaching from generations of things that we may not have learned or still learning as we talk about some of the things here, and interest, compound interest, investing, and what to do with that. So I want to give some questions to the parents and caregivers who are taking on this chair. So, as we talk about what spending, how do you find yourself as a parent or caregiver, like helping in this way? Do you think it's more of a hands on, hands off approach? What would you suggest for them as they kind of navigate new territory for younger and youth teens as they get their first accounts and managing money?
I could definitely, ladies first.
Go ahead.
Well, I'm not going to argue with you on that. So I would say when it comes down to that, you want to be willing to learn with them. I would say as a parent or guardian, neither am I a parent nor am I a guardian. So, take this with a grain of salt if you need to. But I would say if they can have you go along with them to see, so you both can learn, to show that it's okay to still have to learn. Because sometimes, and not all the time, but what I've realized is that we get to a certain age where we assume we're supposed to know certain things. Like we're supposed to know how to buy a house. We're supposed to know to put away money for our 401k. We're supposed to know all this. And those that may not be stuck learning about it all day, every day, or teaching about it may not already know this. So be okay with saying, yeah, I don't know. And find people that are willing to help you. You got to pay for it sometimes, but again, from a parent and a guardian standpoint, you are the leader, what the child is watching. And if they can see you say, okay, let's learn about this, we're going to learn
Yeah.
about that. We're going to do this together, so you don't feel like you're by yourself and you can't have a conversation with the parent, because if you were together from the jump, now it's not I can't go back and let my folks know I'm doing bad or nothing, like my phone, my money's not
Yeah.
good. Now I'm afraid to show up and say, I don't know what I'm doing, because I've never seen you say you don't know what you're doing, and show that you can go learn it. So that'd be what I start off with.
Okay, that's great advice. Don't making no assumptions around that. Starting from square one to at least teach what you know, and then going through that cycle. So I'm gonna ask Joannette our question from Darlene, who's dropped in the chat. Do you recommend then, like a parent or guardian, to have a joint credit card or debit cards, or even the secure cards for youth the first time around?
Ooh, that's a great question.
It
So,
is.
you must be 18 to be able to obtain credit. So I would suggest, if you have someone that is not 18 yet in your household, and you're going to begin having these conversations about how do you spend the money, what is a need versus what is a want, can I afford this now, or maybe, or what am I giving up now, to, what am I giving up later because I want this now. I would say consider doing a debit card, because this way, you're learning how to you're coaching how to manage money, compared to perhaps adding them to a joint credit card where that, um, it could help if the payments are made on time, but if there was a fluke where something was missed and the payment was not made on time, and maybe it won't help them more, hurt them more than help them. So I would say consider your long term. What is the long term goal? If the goal is to help them establish a credit profile, or the goal is to help them, coach them on how to learn the basics of managing a checking account, savings account, in their money.
Mm-hmm. Mm-hmm. Okay, so the secure cards for youth were is that the same as adding your child or youth as an authorized user?
No, so a secure card, you must be 18, and you, put your own money into this, secure card. That's why it's secure. And depending on the financial institution, it could be $300, $500, and you use it, the card paid off and such, until you establish a history of making those payments, having the ability to make those payments on time, and maybe 6 or 8 months around down the road, you're able to approach the financial institution and say, "Hey, it's going to be a good time now for you to review my credit history, and perhaps it no longer needs to be a secure card; it could be just a traditional credit card, right?" And then you, having them as a authorized user, it could help in an event that is an emergency and they need to have access to that credit card. Perhaps maybe you're not around. But again, it really depends. Is this, if the goal is to establish a credit profile, I think that would be a great new section, that topic for the future that will focus just on that. But today we're just talking about how to learn the basics of managing your money with checking or savings account, right? How to start the habits of saving and spending, reviewing what that account balance is on a regular basis before you spend it. Mhm.
Okay. And so I heard you say too, you would recommend starting with a debit card if that's something that they were thinking about doing, just to sum it up for Darlene. And okay, that makes sense though. Thank you for that.
Mhm.
Okay, another question just to follow up for the parents and caregivers who are watching. What is one money conversation you believe every family should have with a young person before they begin managing money on their own? Vincent.
I would say, and it might be a little unorthodox to have a conversation with the child here, but say, what do you want? What are your goals? Give them an idea of saying, hey, if you want something, let's talk about it. Because if you can discuss it, we can figure out what you need to make it. Because if you got to do a couple chores around the house, you can pay for that. Maybe you get your part time job or two if you're old enough to do so. But if you get Christmas cards, get holiday cards, get money for birthdays, it kind of gives you a goal to have them say, okay, I want this. If I work towards it, I can get it. And now I know that I can work to get what I want. And I think that encourages kids to say, okay, what does it take to have that? And if it's like an outlandish goal, cool. Make it even more outlandish. Ever really had that conversation, say, hey, what do you want and how are you want to get it? And you can be that guy for them to say, this is what I would suggest you do. As your parent, I love you. I know what you're good at. Probably know what you're not too good at. Use some things we can talk about to figure out what that looks like. Because starting early just helps them formulate these ideas later down the road when it's good to have an idea of what you want to do. So that'll be what I
Yeah.
would say would be the best thing to do. Again, coming from someone who doesn't have kids, so take it with a grain of
You
salt.
know, I actually love that idea because it does give it that it just doesn't come out of thin air. You
Hmm.
know that there is some work that needs to happen in order to, so whatever they want or they're dreaming about, maybe it's that toy at a very early age, or maybe it's someone who needs new headphones for their gaming or their working out or whatever. Those things can be quite expensive, and especially
Mm-hmm.
when we talk about purchasing things for youth, it's all the electronic gadgets and those things. So setting goals, as we just shared, you both shared earlier, and creating a schedule, that may actually work really well to have a, this is what we're working towards at the top, and we're gonna put some aside, just taking the things I've been reinforced tonight, put some in the savings, put some in
Mm-hmm.
this, and you can divide it out. Maybe there's a donation pile, that we do $1 donation, or however, or church ties, or whatever family structure. You can really tailor that to, okay, by November, if you stay on track, you can earn that. And you might get a few more chores done around the house too.
There you go.
Yeah. What would you say, Joanette, as we talk to our families and caregivers about, was one main money conversation you believe every family should have with a young person before they begin managing money on their own?
Yes, I would say good financial and solid, consistent financial habits. Getting into the habits of saving first before spending, and saving first before spending. That doesn't mean they're not paying your bills. It means that before you buy something that is a want and not a necessity, right? Not something that is required for a regular bills and living. And when you do this, it gives you more options. You'll have more options of if you wanted to start a business in the future, if you want to travel in the future, if you want to purchase, when you're ready to purchase your first home and such. Those financial habits, it's not just about how much money you have today, but it's about how those habits are going to develop and what in the financial position that they're going to put you in the future.
Yes, absolutely. Yeah, and being creating that habit makes a huge difference. It doesn't feel like punishment
Right.
or a bad word when people say budget.
Yes.
You're in the habit of, yeah. It's a quite healthy way of thinking about that. Um, and I love that you gave a progression from youth. It may be a goal set it towards this, but then as you move and advance through, maybe it's more travel, maybe it's more college, maybe it's for this. But those things, as you have the habit in life, you can move that habit to things that you as you get older. That's perfect. Now, we are approaching time. I mean, when you're having great conversation, this is what happens. Before we go, though, one of the things we always do here is I like each of you to share one practical, one clear, practical step with our youth. We've given a lot of knowledge tonight. I want them people to walk away with what's our closing thing you would say to youth or a family supporting them. What can they take away from this discussion to help strengthen their banking and money management skills? What would you say? Joannette, would you please start us off?
I would say, as an action item, schedule a 20-minute money date this week, whether it is to play a Monopoly or to have a specific conversation around money. And compare one thing that you can talk about for this 20-minute date is comparing three different checking accounts from three different banking institutions, including a credit union, or all three could be credit union, right? So you're able to get one conversation in, but also learn how to get all the information before you choosing the checking account or the banking relationship or the credit union relationship.
Mm-hmm.
Mm-hmm.
Thank you. Thank you for bringing that up too. I'm relationship is important, and so that's one of the other shows. So I'm going to say to our audience members, please check out some of our other shows. They go into that. Vincent.
All righty. So I would say whenever you're about to spend some money, about to buy something you want, buy something you need, I want you to wait 7 count 7 seconds to yourself. Don't let anyone rush you because I want you to really think about what you're doing because it happens to the best of us. Sometimes somebody can just sell something so well that you believe that you need it right now, and they're going to encourage you to buy it right now. The quicker you get your money about your pocket, the quicker they get it. So just don't let anybody rush you out your money because people will actively do that as soon as you become an adult. Even as a child, you probably run into that, but people work very hard to try to find ways to get money out your pocket. So 7 seconds to yourself, just count it. Think about it. Do you really need this? Do you really want this? Or was this somebody do a good job of marketing to you? Ask yourself that question. 7 seconds later, you make your decision. But that'd be what I would say. To be practical steps towards keeping your money in your pocket more often than not.
Thank you both for those action items as we part. Those are excellent, along with all of the expertise that you shared tonight. Tonight, we hope that youth and adults supporting them leave knowing that financial confidence doesn't begin when you earn a certain amount of money. It begins by learning how to manage what you have and creating those healthy habits, creating those schedules, having conversations. We're reminded to do those things. Thank you again, Joynette. And thank you, Vincent, for sharing your experience, knowledge, and practical guidance for us tonight. Thank you to our viewers who chimed in, who joined us tonight, and those who asked questions or who were just here being a part of the show. We appreciate you too. Before we go, please make sure to mark your calendars for our next Beyond Table Talk that's held every fourth Wednesday, where we will continue to bring real conversations that help strengthen our financial futures. You will see on our screen our post survey, our QR survey. Please take a moment to complete our short wrap-up survey. Your feedback helps us to create other conversations, and we look at those to see what future shows we should have. Thank you again for joining us, and thank you for the IT team who's been working so hard before and after the show. So we want to say appreciate them too. Thank you to ABEP and again, all of our supporting and their sponsors. Have a great evening. I hope to see you next month on that fourth Wednesday. Have a good night.
Thank you for joining us for another episode of Beyond Table Talk. We truly appreciate you, our viewers, and we want to give a special thanks to our moderators and panelists for sharing their wisdom tonight. You can check out their bios to learn more and their contact information. We also want to thank our sponsors who make these conversations possible. And we encourage you to stay connected. Follow us on social media, engage with the conversation, and share with your community. If you'd like to sponsor an episode or get involved, we'd love to have you to be a part of this journey. Scan the QR code. We take this moment to thank our incredible team that brings this program to life. Before you head out, please take a moment to fill out the post-checkout form. Your feedback really matters. Let's keep the momentum going, and remember, the most meaningful conversations don't just happen at the table, they live beyond it. See you next time.